Hey everyone, good morning and welcome back to the channel. Me, Kevin here, DD06, and we need to have a serious reality check today because what is happening behind the scenes on Wall Street and across global geopolitical lines is absolutely insane. And most everyday people are completely blind to it. Look, I know you look at your phone, you look at social media, and you think everything is totally fine. You see people hyping up the latest tech stocks or talking about a booming economy. But let me drop some truth on you right now. You are being systematically scalped by a system that thrives on your ignorance while you are scrolling through videos. Wondering why your grocery bill is skyrocketing, the ultra-wealthy are capitalizing on historic market volatility, driven by literal wartime threats, rising energy costs, and massive institutional shifts. If you do not understand the macro forces ripping through the markets right now, you are not just sitting still, you are actively becoming poorer by the day because inflation and toxic liabilities are eating your future alive. Before we break down the insane geopolitical developments with Trump, Iran, and China, and exactly how to position your portfolio for maximum wealth accumulation, let us do a quick pulse check right now because I want to see who in this community is actually ready to take their financial freedom. Seriously, do me a massive favor and drop a comment right below this video with your current age and the exact dollar amount you are realistically planning to invest every single month. I do not care if your number is $50, $500, or $5,000. Type it down in the comment section right now because tracking your data and being brutally honest with your numbers is the absolute first step to breaking the cycle of being an average retail casualty. Seriously, pause the video, comment your age and monthly investment amount below, so we can hold each other accountable as a real wealth-building community. Alright, let us dive straight into the massive breaking news that just dropped over the weekend because it changes the entire global economic landscape for the rest of 2026. President Trump is set to speak with Israeli Prime Minister Benjamin Netanyahu today, as sources confirm the two nations are preparing to completely restart devastating military action against the Iranian regime very soon. According to regional intelligence sources inside Tel Aviv, the Iranians thought they could cleverly drag out the current diplomatic stalemate for at least another 2 weeks with a classic strategy of deception and delay, hoping that buying time would complicate any potential return to total war. They were literally looking at global events like the World Cup in America's upcoming 250th anniversary as a geopolitical backstop that could somehow work in their favor. But guess what? President Trump has completely run out of strategic patience. All efforts toward a diplomatic solution have initially failed because Iran is entirely unwilling to make the necessary nuclear concessions to reach a deal. On his return flight from China, President Trump openly stated that he did not even like the first sentence of the Iranian response to the United States peace proposal, stating flat out that if he does not like the first sentence, he just throws the entire paper away. When asked what that sentence was, it was revealed that Iran is refusing to fully agree to a zero nuclear capability clause. Trump made it clear that a 20-year restriction is not enough without absolute ironclad guarantees. And without those guarantees, the United States and Israel are moving straight back to combat operations. What you need to understand as a disciplined investor is how this embedded threat of war ripples directly into your pocketbook overnight. President Trump shared a series of highly symbolic AI-generated images on Truth Social, showing him standing at a futuristic Space Force control center, with captions reading, "It was the calm before the storm." This comes at the exact same time the USS Gerald R. Ford carrier strike group just returned to the United States after a massive carrier deployment that marks the longest naval deployment since the Vietnam War. Secretary of War Pete Hegseth called the work of these sailors phenomenal, praising their absolute resolve and epic fury. But while morale remains high, with tens of thousands of American service members deployed across the Middle East, the economic consequences are flashing bright red if the United States and Israel launch a full-scale combined campaign to destroy the Islamic Revolutionary Guard Corps and completely dismantle Iran's revenue sources. We are talking about an immediate threat to the Straits of Hormuz, where a massive percentage of the world's daily oil supply flows. Crude oil has already been hovering dangerously around $100 to $101 a barrel for almost 2 months. When energy costs stay sustained at these brutal levels, a massive economic recession is almost mathematically guaranteed because high oil prices act as a massive hidden tax on corporate margins and everyday consumer spending power, causing consumer price index numbers to surge to levels we haven't seen since the pandemic. CPI is already sitting at a scorching 3.8%, with core producer price index numbers completely obliterating expectations at 6%. If the Fed sees energy prices spike even higher because of a hot war in the Middle East, chance of a sudden interest rate hike are officially much higher than any highly anticipated rate cut, and that will trigger massive shockwaves across the stock market. But the geopolitical chaos does not stop in the Middle East. New internal reports from President Trump's closest advisors fear that China may move to completely invade Taiwan within the next 5 years. Top military analyst Lyin STs are warning that Xi Jinping is actively moving China to a position where they no longer view themselves as a rising power, but as America's absolute equal, openly declaring that Taiwan belongs entirely to them. A recent war game conducted by the Center for Strategic and International Studies simulated an amphibious attack on Taiwan. And Revev ailed a terrifying structural vulnerability. The United States military would likely run out of precision-guided long-range missiles within a single week, because we are already incredibly overextended supporting operations across Europe, and the Middle East defense experts admit that China has heavily dominated the United States militarily in the Indo-Pacific region across almost every single hardware platform except for advanced submarines. Now, while the Department of War is rushing to fix these shortfalls through accelerated business practices, the real driving force behind China's aggression is not just geographical territory, it is entirely technological. The most advanced semiconductor chips in the world are manufactured right now on the island of Taiwan. They manufacture the foundational silicon hardware that powers the entire global artificial intelligence revolution, and whoever controls that physical chip manufacturing capability is going to completely own the future of global AI development. That is the secondary mission for China, and that is why the stakes have never been higher for the global economy. So, how do you navigate this insane environment without getting absolutely slaughtered as exit liquidity for big institutional funds? You have to stop trying to time the market. Based on daily scary headlines, timing the market is a total fool-ass game that gets retail traders scalped every single time because the trend is your friend until the very end. Look at what happened with the recent stock market drop. The S&P 500 just experienced its first negative 1.2% drop last Friday, marking the first negative 1% day in over 2 full months, breaking a massive 7-week winning streak. Immediately, the internet was filled with bearish panic artists telling you to sell everything and run to cash. But historical data shows us that 52 weeks after an index achieves a 7-week winning streak, the S&P 500 has never once been read in history. We are currently in 2026, which is a year ending in 6 historically midterm election. Years can see a seasonal correction of 10 to 12% between May and October, but historical years ending in 6 like 1986 and 2006 completely defied that trend and closed significantly positive. The truth is the market is currently preparing to test the brand new Federal Reserve leadership transition from Jerome Powell over to Kevin Warsh, who was just confirmed by Congress in a historically tight partisan vote. The market always tests a new Fed chair during their first few months in office, which means we will absolutely see a structural correction at some point down the road. But that correction is not a signal to panic. It is a massive generational gift to buy elite companies at a heavy discount, because the overarching AI infrastructure buildout is still in its incredibly early innings, and there is still a massive amount of market euphoria left to play out before a true secular bear market hits us potentially in 2027. If you want to capitalize on this current market cycle instead of being a victim, you need to follow the exact blueprint that smart money uses to build massive multi-million-dollar portfolios. Look at how we executed our swing trade position in MRAM just last week by recognizing the massive global demand for next-generation memory and data center infrastructure. We established a strategic position and locked in a staggering 160% gain in a matter of days as Mr. Ram's market cap surged from 400 million to well over 1 billion. We did not achieve that by guessing or listening to mainstream media hype. We achieved it by tracking key technical indicators like the 921 exponential moving average crossover on leading AI build-out stocks. If you look at the charts for advanced photonic infrastructure companies like AOI, you can see that by simply tracking the 921 EMA support lines, the stock ripped up a massive 53%. In a single week, the exact same mechanical setup happened with Lumentum Holdings ticker Light, which jumped 21% right off the moving average line, and Coherent ticker Core, which did the exact same thing. This is how professional traders extract massive gains from the market, by tracking structural trends with absolute discipline until the trend officially breaks. When the trend breaks, you calmly take your foot off the gas pedal. But until then, you let your winners run at the exact same time. We are starting to see the early signs of a massive capital rotation directly out of overextended hardware stocks and straight into high-quality software companies that have been quietly aiding for months. The software enterprise fund ticker IGV is already up a quiet 25% since the 10th of April. If you look at a premier enterprise software giant like ServiceNow and run their numbers through an advanced fundamental analysis tool like AlphaScope, you will see that their core free cash flows, cash from operations, EBITDA, and top-line revenue growth look like textbook linear upward lines. It is a company that is fundamentally growing across every single vital metric at an incredibly consistent pace, yet the broader retail crowd is completely ignoring it because they are too busy chasing whatever stock is trending on social media. Even a mega cap titan like Microsoft is coiled and looks ready to break Out to the upside, completely ignoring the recent news that Bill Gates sold off the final remainder of his legacy shares. Look, Bill Gates selling his last block of shares is a total non-issue. He actually sold the vast majority of his stock years ago and completely missed out on the historic opportunity to become the world's very first trillionaire by exiting way too early. Before Microsoft pumped to the mid $500 range, if the macro panic over Iran or China causes Microsoft or ServiceNow to dip this week, that dip is an absolute financial blessing for anyone focused on true wealth accumulation. To successfully transition from a retail casualty into a financially free individual, you have to completely change your daily consumption habits and adopt a strict framework of long-term personal finance discipline. Stop spending your hard-earned capital on depreciating liabilities just to impress people you do not even like. If you are driving around in a massive luxury car loan that eats up $500 or $800 a month, you are actively sabotaging your financial future. You should be completely comfortable driving a reliable older vehicle like a clean 2006 model that is completely paid off in cash and living in a highly minimal cost-efficient space, so you can maximize the spread between your income and your living expenses. That spread is your financial ammunition, instead of letting your cash sit in a traditional bank account where inflation systematically melts your purse. Acing power by 3 to 4% every single year. You need to automate your investing process through dollar cost averaging, or DCA. Dollar cost averaging means you do not care whether the market is red or green. On a random Tuesday, you set up an automatic transfer every week or every month to buy core diversified index funds like VU, which tracks the top 500 most profitable corporations in the United States, or SHD, for robust dividend growth and compounding stability. When the market dips, your automatic DCA simply buys more shares at a cheaper price, and when the market rips, your net worth expands. It completely removes human emotion from the equation and relies on the undisputed mathematical reality that time in the market always beats trying to time the market over a long-term horizon. You also need to be utilizing tax-advantaged investment vehicles like a Roth IRA to protect your future wealth from the government. If you qualify for a Roth IRA, you are investing your after-tax dollars today, which means every single dollar of capital gains and dividend income you accumulate inside that account grows 100% tax free and can be withdrawn completely tax-free once you reach retirement age. Imagine compounding your investments inside funds like VO over the next 20 or 30 years and never having to pay a single dollar of capital gains tax to the Internal Revenue Service on millions of dollars of wealth. That is how you legally game the system in your favor, but you cannot do any of this if you are constantly panic selling your positions every single time a scary geopolitical news report flashes on the screen. Smart investors view global volatility and red market days as a massive liquidation sale on the best assets in the world. They do not panic because they know that the global corporate infrastructure build-out is a multi-decade trend that cannot be stopped by near-term noise. You must play this current market cycle with extreme precision and absolute tight discipline, because the macroeconomic data is warning us that a major reckoning will eventually hit the global economy by the time we reach 2027. The combination of sustained triple-digit oil prices, high wholesale producer inflation numbers printing at 6%, and a Vili overextended global military footprint means the macroeconomic chickens will eventually come home to roost. But until that structural breaking point occurs, we are sitting inside a massive window of artificial intelligence-driven wealth creation, and it is your absolute fiduciary duty to yourself and your family to maximize this opportunity. If you want to access my complete long-term fundamental analysis, my exact daily swing trade alerts on data center stocks, and full access to advanced fundamental metrics, make sure to check out the links in the description below. Secure your access to AlphaScope right now to completely revolutionize your stock picking workflow, and make sure to download that free comprehensive AI build-out stock PDF so you can see exactly where institutional capital is flowing next. Stay incredibly safe out there, traders, and remember to control your emotions, follow the data, and stick to the plan. Hit that subscribe button. Peace.